Hi, this is David with ENZO Trading System, and today I would like to do possibly the most important video regarding our system. This is a big warning, and from now on is going to be a required watch before thinking about trading with us. So what I would like to show is starting from our performance for the year 2020. We already went in detail on a previous video about this. For now, I'll just focus first of all on the total profit that we obtained. Let's say about 120% for the whole year. And then the drawdowns. So the drawdown would be those periods of time when there is a sequence of trades, whether it's because of the market or the behavior of the algorithm, where the fund just loses value. And this can take, can be a short time, but it can be also quite a long time. So here we have, let's see, we have possibly the worst case we had last year, starting from June all the way to November. We pretty much only had 1 month of profit. Of course, the algorithms shouldn't do that by design, but it just happens, whether the algorithms needed to be updated or just the market is just a different beast for some reason. So let's assume that this will happen again in the year 2021. And let's actually focus on this period. Let's go here and select for visualizing only a restricted time frame, which would be from indeed June 1st to November. Let's say, yeah, November the 1st. So let's say that a new user, it's really excited, hears good things about the system and decides to come in summer. And then invest whatever amount of money, and then sees first month loss, second month a little bit of profit, but still generally lost money, and then lose. So this is about under 52 days. That's quite a long time for a drawdown. This is definitely not what we aim at, but it is what it will happen, what can happen. So the basic point is, do you have the patience to last 152 days, possibly ending up at minus 15%, touching a drawdown, maximum drawdown of 20%, so reaching possibly a little bit of profit, 3%, and then going all the way down to 15% again. If you can manage that, then possibly, let's say 2 months later, this minus 15% became plus 22%. It's not a huge amount, but it's a lot better than minus 15%. And only for a couple of months more. So now, recently we also introduced leverage trading, which allows for a lot of profit, but also increases quite a bit the depth of the drawdowns. So I will switch now to the simulation and see, make a couple of scenarios using leverage trading, and again focusing on one of the worst periods of the trading that we had in 2020. So normally futures trading, they have a lower commission. Just to make it a little bit more scary, let's say that we're using the spot commission, which is about twice as much. Let's say this also compensates for added slippage or for whatever other reason. So now let's focus here again. May, June, and November. So we have the same situation. We're using the same commission amount and no leverage. Minus 15%, maximum drawdown is 20%. Leverage 2, now it's minus 30%. Leverage 3 now is minus 42% with a maximum drawdown of 52%. So that's 152 days, and after 152 days, you're at a minus 42%. And maybe you want to bail out. Possibly quite a few people would do it if they didn't believe in the system. Of course, I wouldn't do that, but because I know how it works and I believe in it. So if you're ready to take this amount of pain, it could be, it doesn't necessarily have to be this bad, but it can be. Then perhaps, you should try the system. But if you don't, at least don't use leverage. Stick to 1x possibly. Of course, at the end of the year, as we've seen previously, even a tiny amount, even 2x or 3x makes quite a bit of a difference in terms of profit, but you do have a lot of drawdown. In this case, through the whole year, we had a maximum drawdown. If we would have had the maximum drawdown with leverage 3x and with commission in spot, minus 60%, which means that possibly you started off with $10,000 and at some point you lost 60% of that. Possibly, hopefully one first earns something and then loses it, but it can happen. So you have to make a quick review. You should be able to, you should think about preparing for possibly several months of drawdown. And drawdown will be a lot worse if you use your leverage. Of course, you likely make a lot more profit, but it's a lot worse drawdown. And then another thing, it's important at the psychological level not to fixate on single trades or single periods. So it's easy to go here and say, say this is 200 days, this is 150 days, but each person has to live through those 150 days. It means spending most of the time in the negative and looking at trades that are just a little win and then a loss. Maybe a loss, then a little win, and then sometimes possibly a streak of losses. Just a loss after loss after loss after loss. And sometimes it just looks stupid, The market, there's a tiny win and then the market spikes up and then the algorithms will just buy at the top and sell almost at the bottom and make you lose. So if you can handle that, if you can ideally ignore what happens on a daily basis or a weekly or sometimes monthly basis, then after 6 months, perhaps you'll end up with a profit, But if you cannot do that, usually what happens with certain investors, they will start to tweak the amount of the investment. So that's a big problem, because if you spent 5-6 months thinking that it's just going in a terrible way, you may be thinking about reducing the size of the trades. This can be either just using a different size from configuration. Anybody can go, let's say, oh, I'm losing money, so I'll just use 50%. Or it could be a matter of just reducing even worse, possibly reducing the leverage. Let's say you were at 3% and you saw quite a bad drawdown and decided that you don't want to take those losses anymore, and so you go back to 1x. So now what happens the next months, you would have made money, but because the months that made profit only at 1/3 of the size, then you're probably still down in profit. And so basically, it's really important to just stick with a certain amount. If you have to vary the amount, remember the time when you vary the amount and then somehow start counting. Okay, I had the $10,000, so I removed $10,000. Start counting 6 months or 1 year from that change, and then that amount, you should calculate into the future what the effect has been. Although this, we don't generally have an interface to do that. We do have something, but it's not in the documentation. This is calculation that you should do on your own. Basically, how you manage your own fund, that's your own risk. Just make sure that you don't intervene and that frequently add or remove money, because it will just interfere with the system that is built to make a profit, let's say in the long term, even though it's not really long term in financial in the financial world. 6 months, 1 year is not really a long term. But I understand that in crypto, people, they have different expectations. So I guess this is really what I wanted to say. Just make sure that you can handle the drawdowns and don't fixate on the single trades or a week of trades. The algorithms will look stupid because they're not. You make money in a statistical way, not in a smart way. Sometimes, here we go, there's a big jump up, and then there was a 10% that wasn't achieved by the algorithm. The next trade is just going to be a loss. It does happen, but you have to look at the big picture. The big picture is you start at the beginning of the year, you end at the end of the year, and then you have your profit. Could be under 20%, perhaps with a little leverage, could be 400%. Perhaps if you have a good commission on futures, perhaps 1,000%, who knows. Generally, I mean, what I know is that statistically we did that for several months, and we seen the model to profit really well in 2017, 18, 19, 20. So just follow those rules, and your life will be easier. Just try not to obsess about short periods of time, and hopefully we'll all make some money. Thank you, and see you next time.